So Dylan, you've called for offers on a few sales lately. What's hot, what's not?
I mean, it's been interesting. We're calling for offers right now, and this is just data from this morning. And someone said we're looking at new construction six caps in California, like new construction buildings in the overall Bay Area at a 6 cap. And it's really hard in this market. I mean, I'd say the beginning of, say, Q1 into Q2, we were seeing buyers were at a 5, like show me something with a 5, and sellers were getting comfortable, maybe not a new construction. And now we're seeing buyers show me a 6. And that's a big differential in a very short period of time. It's like actually points in time from May and June, it was a 5. July and August, it was a 5.5. In September, October, it's a 6. And I mean, these are massive movements in the marketplace. And so it's been interesting just hearing the mentality from the buyer pool. And I get it, it's a very challenging market. As a seller, you've got investors, you're trying to do the right thing. And as a buyer, is it going to drop even further in the market? So it's been really challenging, it just sort of to get ahead of where the market expectations are right now.
Makes sense. I'll jump us forward to some of our data, which is mixed in with market data. This is success on sales. So the percent of listings we brought to market up until Labor Day, no longer accurate. The amount that went pending or sold. And you know, you can see we're beating the market by a tremendous amount. Now, one part of that is we've got CoStar data versus, our data. So it mixes a lot of different qualities of maybe brokers and properties. So I think that's a little misleading. But overall, I started thinking through why are we having so much more success on taking properties to market and getting them pending or sold. And I think the number one thing I've noticed this year is everything we've taken out, we've gotten multiple offers. And so when an owner's staring down 5 or 6 offers, they might not be where they are, where they want to be. It at least has made a market for them to make a decision, an informed decision on whether now is the best time for them to sell a property. And so I think that was one that is very large. The other is just our volume of sales. So you'll see on another slide how many we've worked on this year. I can quickly, especially in Seattle where I specialize, tell an owner, I just sold a property like this down the street, or I sold last month. This is where pricing will shake out. And at the table when we're discussing, should we go to market or not? Should you work with us or not? The numbers I like to give them are 2. And one is like, hey, last offer or review date I had for a property like yours, this is where most of the offers came in. And this is the numbers I want you to make a decision on whether to go to market and sell or not. This is the higher number that you'd really like, and we're happy to advertise it, but there's no guarantee. And taking a property to market is really disruptive for the property, the management company, and the overall operations. And so I have them think really hard about that lower number where the general offers are coming in before they go to market. I think that's helped us close a lot more of what we've taken out. So Dylan, I looked at our numbers. 2019, we actually did outperform. Our average sale price was 102% of what we listed it for, and that was driven by a few really
lots of motivated parties.
Yes, outperforming sales. So How long do you think it is until we're in a market like that again?
I'm a believer in this market. I think we're going to be back at that point in 2025. I know it's becoming cliche already to survive till 2025. I think a big difference in this next cycle that we're going to get into, and I've studied these cycles from the 70s forward, and it seems like every cycle, the upturns lasted longer and the downturn's been shorter. And I think that's just availability of information and availability of capital. And I think that's just changed real estate is much more, less of an alternative. And I think there's a lot of data out there.
So this was fun to prepare. We looked at all the transactions we worked on, and we wanted to look at what are the seller motivations in the market. And so I'll explain, we did this internally, but basically the percentages obviously are accurate, but the time of life, what does that mean? Best example I have is an owner called me, she told me about a building, it's not operating very well, really wants to sell it. And I was like, well, why are we doing this now, right? And she said, well, my family's owned it for 60 years. On the surface, having this large apartment building probably makes us look wealthy. We're kind of broke. We've never taken a vacation. We're done, right? Whether I get 10 million or 7 doesn't matter. I'm 84. I'm out. So time of life is a big motivator. Underwater, pretty clear. Cash flow is not good. Debt's coming, not good. So they're just saying, I'm going to move on from this opportunity and go live to fight another day. Flip side, debt due, we think is going to see that number tick up quite a bit next year and the year following. A lot of 3 and 5 year loans placed in 2020, 2021. So I think there's going to be some opportunity. And then for timing the market, thought that was an interesting one, and I'll ask you a question about it. And then for death, dissolution, divorce, these are standard reasons that people need to sell. So as you can see between those, the time of life and the 3Ds, it's removed from the economy, it's removed from the macro movement. It's just something people need to do. And so I think that's where a lot of the opportunities come from. But if you were timing the market as a seller right now, Dylan, what would you be selling?
I mean, I've worked with several clients that said the market's not getting better anytime soon. I don't want to own this building in 3 years. I'm going to sell now. And we have a lot of clients that say, I will own this building for 10 or 50 years, and my advice is don't sell. Like, this is not a great time to sell if you don't have to sell. But people that do want to sell in the near term, whether it's 12 or 24 months or even 30, they're saying, let's do it quickly. I want to time the market now because I don't see it getting better in the near term. So it's 10%, but it is impactful when people realize where we're, like, kind of where we are in this particular cycle.
And then last one, buyer motivation. So opposite, time the market. Right, about half the buyers we're working with that have closed transactions feel really opportunistic, feel great about, maybe not great, but feel confident where things are going and want to buy in at a good basis, usually sacrificing some cash flow. 10% on the cash flow front, that's a pretty rare response. I think they found a good deal in Eastern Washington or something. Long-term hold is another common one I've had, where I've had an owner call me, said I'd sell it, it's still at my old price, I don't really care, it's the best location in Seattle. I bring it to the right buyer, and they're like, it is the best location in Seattle. I'll eat that because I'm going to own it forever. We've got the 1031 exchange buyers, so people opportunistically selling and then moving their money across and buying something else in the market. And then diversification is actually an interesting one. This is usually where our outlier buyers come from. They've never bought before. They don't really know what they're doing. Kind of like, hey, I'll diversify away from the stock market. Oh, what's the list price? Great, I'll pay that. Like, great. Everyone wins.
That's how they all go.
Now, I think if you're buying as a diversification strategy, we just sold a property recently, I think they do quite well. Their basis is good. They already know they're getting into low or no cash flow, and I think we're going to see a lot of growth over time. So encouraging longer-term debt placement, and I think owning real estate at this basis, especially in urban markets, is going to do really well. So those are the motivations.